Hello and welcome. Today we're going to demystify one of the most exciting steps a business can take, exporting. Now, I know it can seem complicated, but trust me, once you have the right map, it's a really clear path to growing your business globally. And in this explainer, that's exactly what we're going to give you, a step-by-step roadmap from start to finish.
So, are you ready? Are you ready to see your products in brand new markets, reaching customers you've only dreamed of? Exporting is just a massive opportunity. And really, understanding the process, well, that's the first critical step to unlocking all that potential. All right, let's dive in.
So here's the journey we're about to take together. First, we'll look at how you turn a simple offer into a rock-solid order. Then we'll get into production, the initial paperwork, and all things shipping. After that, we'll navigate the world of customs, make sure you get paid, and finally claim those awesome benefits you've earned. Let's get started.
Every single export, it doesn't start with a container or a ship. It starts with a conversation that becomes a formal offer. This first step is where you lay the groundwork for the entire deal. It's where a potential sale becomes a concrete, binding promise.
Okay, so the most common starting point you're going to encounter is something called a pro forma invoice. Think of it as a detailed quotation or a formal offer. It clearly says, here's what I'm going to sell you, and here's the price. It's not a demand for payment, not yet. But, and this is key, once your buyer signs it, it transforms. It becomes a confirmed official export order.
Getting the details right on this document is absolutely crucial. You need the buyer's full name and address, no typos, a crystal clear description of the goods so there's zero confusion, the price, of course, stated in a major currency like US dollars or euros, and finally, the conditions of the sale. How long is your offer good for, what are the payment terms, and what's the delivery schedule? You've got to be accurate here because it will prevent some major headaches down the road.
And here it is, the big moment. The buyer can accept your offer in a couple of ways. They might sign and send back that pro forma invoice, or they could open a letter of credit in your favor, which is basically a bank's guarantee of payment. The second you get that confirmation, whichever way it comes, well, congratulations, you officially have an export order to fulfill.
All right, order confirmed. Now we switch gears from sales to operations. It's time to actually get your products ready and, at the same time, start tackling all that essential government paperwork. The two really go hand in hand.
So this part is pretty straightforward. You either make the goods yourself or you buy them from a supplier. But here's a great tip. You don't always have to fund this part yourself. Banks in India offer something called packing credit. It's a type of pre-shipment finance designed specifically to help exporters like you cover the costs of making and packing your goods. Super helpful.
Now let's talk about a key piece of paperwork, central excise. The good news is, exported goods are exempt from this duty. You just have to decide how to handle it. You've got two main paths. The rebate method means you pay the duty up front and then claim it back after you've shipped. It's simpler if you're just starting out. The other way is clearance under a bond. This is better for regular exporters. You don't pay anything at first, you're just covered by a bond, and it all gets squared away after the export is confirmed.
Before your goods can even think about leaving the country, their quality often needs an official stamp of approval. For a whole lot of products, a pre-shipment inspection is mandatory. This is done by an Export Inspection Agency, or EIA, and they'll give you a certificate that says your goods meet all the required standards. This isn't just a piece of paper. It's a real guarantee of quality for your buyer.
Okay, so your goods are made, they've been inspected, and they're cleared. Great, but now what? How do you get them from your factory floor all the way to the ship? This is the logistics phase. This is where the physical journey of your product really begins.
I want you to think of this as your pre-flight checklist. Number one, and this is probably the most important thing you'll do here, is appoint a clearing and forwarding agent, a CNF agent. These guys are your experts on the ground. They handle all the complicated port and customs stuff so you don't have to. Then, you'll make sure your goods are packed tough for a long journey and clearly marked. Your CNF agent will help book space on a ship or plane. You'll arrange a truck to get the goods to the port, and critically, you will get insurance to cover your goods in transit.
And just like that, we've arrived at the port. This is the final gateway, the last hurdle on home soil. Getting your goods through customs efficiently is so important, and the whole thing is driven by some very specific documents.
So your CNF agent really takes the lead here. They're going to prepare and file the most important document at this stage, which is called the shipping bill. Honestly, the best way to think about a shipping bill is as a passport for your goods. It's that simple. If this document isn't approved by customs, your stuff isn't going anywhere.
Once that shipping bill is filed, the agent gets what's called a carting order. It might sound fancy, but it's really just a permission slip. It's the official OK that allows your cargo to be physically moved into the port's customs area, ready to be loaded onto the ship.
So, inside the port, a customs officer is going to physically check your cargo. They're making sure that what's in the boxes matches what you've declared on the shipping bill. Once they're satisfied, they'll stamp the bill with these two magic words: "Let export." That's it. That's the final green light, the ultimate approval from customs. After you get that Let Export order, your goods are loaded onto the ship. The ship's captain then gives you a document called a mate receipt, which just confirms your goods are on board. Your agent takes this receipt, goes to the shipping line's office, and exchanges it for the bill of lading. Now, the bill of lading is a huge deal. It's basically the title deed for your goods while they're at sea.
And the ship has sailed. Awesome. But, hey, your job isn't done just yet. Now we have to move from the physical journey of the goods to the financial one. It's time to gather up all those documents and, most importantly, get paid.
Seen in exporting, getting paid is all about presenting the right documents. You're going to submit a whole set of paperwork to your bank. This will include your final commercial invoice, the full set of that bill of lading we talked about, the insurance policy, and anything else required by the letter of credit. The bank then negotiates these documents, which just means they check that everything is perfect, and then they release your payment.
Okay, the money is in your account. We're almost there. But there is one last and very profitable step. The government actually provides incentives to encourage exports, and now is the time to claim them.
This really is the final piece of the puzzle. You'll file claims for any duties you might have paid. So if you use that excise rebate method, you'll claim that back now. You'll also claim something called duty drawback, which is a refund on customs duties you paid for any imported materials that went into making your exported goods. This closes the loop on the entire financial cycle of your order.
And this brings us to a really key takeaway. An export isn't done when the ship sails. It's not even done when your buyer pays you. The process is only truly 100% complete when you've received every single rupee you're owed, and that includes all of those government benefits. So there you have it. You have the map. From that very first pro forma invoice all the way to the final duty drawback claim, you now know the path. Yes, the process is detailed, but it's absolutely manageable, step by step. So the only real question left is, what new market will you conquer?